Does getting a homeowner's insurance policy confuse you? And do you ever wonder how to tell if a policy is right for you? Insurance can be tricky, and it's hard to know for making the right choice, especially when it comes to rental properties. My name is Sean, and I make real estate easy. In today's video, we're gonna be talking about how insurance works, what it costs, how to pay less, and what you need to do if you need to file a claim. And by the end of this video, you'll know more about insurance as a landlord than you ever thought you would. And with that knowledge, you'll be able to make the best choice when it comes to buying insurance. So first, let's talk about how homeowners insurance works and how it's different from landlord insurance. So usually homeowners insurance is for when you live in the home yourself, and landlord's insurance is just for a property that you own as a rental. Insurance companies there to help you in a worst case situation, like if your house burns down, a car drives through your front door, or your water heater explodes and floods your basement. They're here to help protect you against a tragedy where you have to pay a lot of money up front, and in return you pay them with a monthly or yearly payment, also known as the insurance premium. Insurance companies work by taking these premiums from their thousands or millions of customers and pulling them all together to help pay for the few people that encounter major accidents every single year. So the riskier you are and the more likely that you are to file a claim, the higher your premium is going to be. But if your home is in a safe area and you're seen as a low risk person, then your premium will often go down because you're more unlikely to file a claim. Homeowners who live in their homes usually take better care of the property. They're more aware of any issues that are happening with the home so they can stop it from getting worse, more so than a renter would. So homeowners insurance is typically cheaper than landlord insurance because the risk profile is different. Now, the difference is even bigger if you're renting your property on Airbnb as a short-term rental. People who live in a home for only 2 or 3 days really don't care about the property as much as a long-term tenant would who has lived there for many years. So short-term rental insurance costs way more. Now, if you break down the components of homeowners insurance, the two most important parts are going to be the dwelling coverage, which covers damage to the home itself, and the liability coverage, which applies if something happens to a person when they're on your property. So as an example, dwelling coverage would apply if your home catches on fire. Now, let's say the damage totaled to $50,000 to repair the property. So instead of paying $50,000 out of your own pocket, the insurance company will come by, do a report, and give you money based on your policy and what they think it will cost to either repair or replace it minus your deductible, which is something that we're going to get into later. Liability coverage is similar, except that this applies if someone trips and falls in your property and then sues you personally for $30,000. So again, instead of you having to pay this person $30,000 out of your own pocket to cover this injury, the insurance company will do the report, see if this injury is truly caused by an accident, or if you knew about the dangers of this property and you didn't do anything to fix it. Then if it's approved, they'll settle or go to court with them and will cover any legal costs and payments as long as they're less than your liability coverage. The dwelling and liability coverage on your policy are the maximums that the insurance company will pay in a worst case scenario. And if the damage or judgment is higher than that, then you would have to pay for that difference out of pocket. So it's important to have the right limits based on your total exposure. Now, there are also some small add-ons to every insurance policy if you want them. One of them is personal property coverage. So this means that if something gets stolen or something gets broken inside your home, you can potentially make a claim for it and get some money back. So this is usually for a few $1,000s or maybe upwards of up to $100,000 if you have very expensive jewelry in your home. There's another add-on called water backup and sump pump overflow that will cover any damage that comes from a sewer line that backs up and floods your entire house. Now, if you own a home that's free and clear with no mortgage, then it's completely up to you to decide if you want to pay for insurance or not, or if you want to self-insure, which means that you don't pay the monthly premium, but if something big happens, then you have to pay for all of those costs out of your own pocket. But if you have a mortgage, especially with a big bank, then they're typically going to force you to have insurance, and the dwelling coverage usually needs to be at least what the loan amount is. So if your mortgage is for $400,000, then they're probably going to want you to have a dwelling coverage that has at least $400,000 in protection. In the very unlikely event that your house burns down completely, then you can file a big claim for it and the lender will be able to get back their money to cover the loan. So now that we understand how homeowners and rental insurance works, let's discuss how these policies are priced. Different companies charge different premiums for their policies. If a company is doing very, very well and has a lot of clients, then they may be able to offer you lower premiums. But if the same company got hit with a slew of claims and they're out of money, then they're probably going to be charging everyone higher prices on their premiums. So always shop around for the best policy. Another factor is the location that your property is in. Homes in disaster-prone areas cost more to insure. So for example, my properties over in Jacksonville, Florida tend to have a higher premium based on the value of the property than my properties in California because California is relatively calm, but Florida faces hurricanes and heavy rains every single year. So this leads to more claims and even puts some insurance companies out of business. Your home value will also determine your premium. If the policy is for $1 million, it's naturally going to cost a lot more than if your policy was only for $300,000. So the higher value will usually mean higher premiums. And the same thing goes for liability. Another important factor is your deductible. A deductible is how much you're going to have to pay out of your own pocket before the insurance money kicks in. So if your deductible is for $5,000 and you have a $7,500 claim, then you're going to be paying the first $5,000 and your insurance company will come by and cover the remaining $2,500. The deductible deductible number is usually a per incident number. So that means that if you had a branch fall on your home and cause a big hole in your roof 1 month, and then a car hit your house on the next, then you have to pay deductibles 2 times. Another factor that determines the price of your premiums is your credit score. If you have a better credit score, then the insurance companies will tend to think that you're a more responsible individual and they're going to offer you these lower premiums. Now, of course, if you've been accused of insurance fraud, or if you filed a lot of claims in the past, then they're going to charge you a lot more for your premiums, or just flat out deny you coverage because they're going to see you as a higher risk asset. So now that you know how homeowners insurance works and how it's priced, here are some tips on how you can pay less for your homeowners policies. So the first one is, if you have a lot of properties in one location, you can ask for a bulk discount by bundling all of your policies with one insurance provider. Also, you can get a discount by bundling different types of insurance together, such as your auto insurance. Personally, I like going to insurance brokers because they can help you shop around for the best quotes and offer you wholesale prices on the policies, which means that you might get insurance policies for cheaper than if you went to an insurance provider directly. Now, every homeowner's insurance company also has different programs and incentives. Some of them might offer you a discount if you have a home security system installed, or they might give you a discount if you have fire safety improvements. Like I mentioned earlier, having a good credit score will also let you have a lower policy premium. Now, one of my favorite tips to lower my insurance is to ask for a higher deductible. Another way to pay less is to shop around. One thing that most people don't realize is that you're able to shop around and cancel your homeowner's insurance policy whenever you want. So let's say you're going to one company for 6 months and you find out later that you can get a better policy with another company. You don't actually have to wait until the rest of the year to switch. You can just switch right now, cancel your current one, and your old provider will send you a check for the unused portion of your insurance policy. So it's very easy to switch, and we do it all the time. And when you're comparing policies, make sure you're comparing apples to apples. Make sure you're looking at dwelling coverage, the liability coverage, the deductible, and any adders that they have, and then decide which company you want to work with. One company that I use a lot is called Steadily. They're a nationwide insurance broker that focuses on creating landlord policies for real estate investors. Back in the day, it was very hard for me to find a good insurance company because you need a different one for every state. But since Steadily is nationwide, you can easily find a quote just by going on their website and typing in the property address. They're going to give you an initial quote, which is going to be pretty competitive, but then a person on the back end will actually do some more research and try to find you a better quote. We've used them to help us find insurance policies for several of our properties, and they work for long-term rentals, short-term rentals, and even vacant properties for fix and flip projects, and I recommend them to all my friends. Now, if you guys are interested in checking out Steadily, you can go ahead with the link down below, or you can go to goodsweethomes.steadilypartner.com to get a quote yourself. So now let's say that you have your insurance policy, you have your home, but something happens on your property. What do you do now? So let's talk about the claims process and how that works. When an incident happens, the very first thing that you need to do is contact your insurance agent. They're going to ask you a lot of questions and make you fill out some forms. So make sure you answer everything accurately and fill out the forms completely, because a lot of these things are going to be recorded and will be in a database that they're going to use when it comes to the investigation. They're going to be asking for photos, receipts, and any correspondence that you might have from any other attorneys if you have it. Then they're going to tell you if it's covered by the policy. So if the damage was caused by an earthquake and you don't have earthquake insurance, then they may say, sorry, you have to pay for this all yourself. So you need to talk to them and find out if this is something that they will cover in the first place. The insurance company will then send an adjuster out. The adjuster will take photos, look at it, and determine how much to actually pay you out. So going back to your insurance policy, they'll either pay you out based on actual cash value or replacement value. So that's something the adjuster will do for you, and then they're going to give you the amount that they think is fair minus your deductible. Some insurance companies may pay the contractors directly, or they may give you a reimbursement after you pay your contractor. And then during that time, they may move you out or move your tenants out to a hotel or another home and cover those costs as well. So again, it all depends on the condition of the property after the incident. And for landlord insurance, they may even cover the cost of lost rents if you can't rent it out while it's being repaired. So one thing to note is that typically insurance companies want to pay as little as possible. So you need to do your best to make sure that they pay you as much as you need to get the property back to its original condition. And to make sure that you have a smooth and clean process, just make sure that you have all of your records in place. Make sure you take as many photos as you can and fully understand the terms of your policy so that you don't get surprised if something is covered or not. So now that we got to this point, you probably know more about homeowners insurance than you ever thought you would need. But if you guys still have any more questions about what type of policy you should be getting or anything like that, then feel free to ask me down in the comment section below. And again, if you guys are looking for a policy for real estate investing, whether it be for long-term rental properties, short-term rental properties, or fix and flips, then I highly recommend that you start your search with Steadily with the link down in the description. And now that you know how homeowners insurance is priced, you may be wondering how to also get the best quotes for a mortgage. So if so, you definitely want to check out this video where I go over the 7 questions that you need to ask your lender to get the best rates. Thanks for watching. I appreciate you, and I'll see you next time. Take care.